As a result, no lawsuit was ever filed against Raymond Hill, the Mainland CEO, and no money was ever recovered. No indictments have ever been filed against anybody in the failure of Mainland Savings. Okay, so here we have this S&L. It's wired in to Walter Mischer and James Baker. In the summer of 1985, James Baker went before a Senate Finance Committee as Treasury Secretary and told them that there was nothing to worry about in the S&Ls. Everything was wonderful and fine and nothing bad was going to happen. At the very same time, Mainland Savings was entering into a $68 million land deal with Adnan Khashoggi, a Saudi Arabian middleman and arms dealer. And it was a very complicated deal. The result of it was that Khashoggi walked away with about $16 million in cash profit, pure profit from this land deal. The taxpayers later got stuck with about a $50 million loss on this deal. This was closed. This deal was closed and the money transferred on August the 1st, 1985. 6 days later, Adnan Khashoggi begins the transfer of $5 million to Ghobaniphar, the Iranian middleman, to start the first publicized arms for hostages deal. It's interesting that he transferred $5 million to Ghobaniphar because at the same time Mainland was basically giving him $16 million. They also gave him a $5 million letter of credit that was very strange because it could only be drawn on in the first week in November of '85. And it had all the earmarks of a guarantee. And in fact, later when Khashoggi's people were trying to cover this up from the FBI, who caught on to this pretty soon, they said it was to guarantee some stock that Khashoggi had bought from Mainland. But the money to buy that stock had come from Mainland in this deal. In other words, Mainland gave Khashoggi $10 million. He gives it back to them in exchange for $10 million in stock. And they said, oh, by the way, here's a letter of credit for $5 million to guarantee this stock. It didn't make any sense at all because it came from Mainland. The money came from Mainland, but the $5 million matches exactly the $5 million that Khashoggi paid Ghobaniphar.
So, Pete, this is, in a sense, the beginning of IRAN Contra.
Yes.
That's funded with S&L money. So one of the reasons why Baker and Bush and the U.S. government was not regulating the S&Ls, was not doing something about this crisis that was emerging, is because they were using the S&Ls to finance some of their off-the-book activities they didn't want Congress or the public to look into. Is that a correct?
I think that's ultimately what happened. Now, whether we can prove that they, quote, used them, we'll probably never know, but that is the ultimate upshot of what happened. And the money, of course, from Mainland ultimately came from the American taxpayers. So we, in a sense, were financing these covert illegal operations. And it's the way that, of course, Oliver North and William Casey, it's the way that George Bush, the way they like to do things. I mean, North testified before Congress that what William Casey was looking for and trying to set up was a self-sustaining, off-the-shelf, self-financing covert operation. And here we had it. We see it in operation with the savings and loan money that ultimately came from the American taxpayers. So, Khashoggi wasn't out any money. The Iranians and Israelis really weren't out any money. It came from the American taxpayers.
It's incredible.
Now, in so much of what we've talked about previously in Alternative Views and in a lot of the news stories that you would read, they would mainly focus on the savings and loans themselves and all these wheelers and dealers like Don Dixon up in Vernon Savings or Charles Keating and all of that. But we're talking about a stratum above those people, aren't we?
Oh, definitely. I think Dixon and Keating and all the others, Ed McBurney, Jarrett Woods, Tyrell Barker, were just front men. I mean, they were cutouts, basically. And if you look at how much money they got, I call them 1 or 2 percenters. Dixon got maybe, what, $20 million out of Vernon? I mean, he himself. And Vernon is costing taxpayers over $1 billion. Keating got about $40 million. And Lincoln Savings is costing taxpayers $2 billion. So you can see you're getting 1 or 2%. And it's a classic front man setup. And the people that you have to, who's really getting this money, and you start scratching and digging, you find that you're in another stratum, as you say, of businessmen who are connected to the politicians very strongly. Of course, Keating had strong connections too, but if you look at who got the money out of Lincoln, you find John Connally and Ben Barnes getting close to $100 million. You find a little bank in Paris called Saudi European.
Paris, Texas.
Paris, no, actually Paris, France.
Paris, France.
Yes. It connects into the BCCI.
Oh, I see.
And Keating was investing money in that. And you start scratching and digging, you find even bigger players than Keating behind this.
So then this layer is the layer of the mafia and the CIA. And was there another layer above them, like the big banks? They were getting the money, the benefits of the money laundering from drugs, because they would be laundered through the U.S. big banking system.
Well, that's correct.
Were they also benefiting from this at even
yes.
same level or higher level?
Well, the banks and insurance companies, believe it or not, were some of the big institutions that got bailed out by the S&Ls. If you had a piece of property or an office building, the first mortgage or the first lien on it might be held by a big bank or a big insurance company. And when the savings and loan would come in and take out everything and refinance the whole deal, the banks and S&Ls would get paid off by the savings and loan. In fact, that happened in the Khashoggi deal. Texas Commerce Bank had a $15 million mortgage against Khashoggi's property. And the money to pay off that mortgage came from Mainland Savings and also Lamar Savings in Austin joined in that. So Texas Commerce Bank got all their money back from the savings and loans. And you find it happen time and time again. A piece of property will have a big first mortgage by a bank or insurance company that will get paid off by the S&L when they take the whole deal out.
Well, as I understand the big banks, I mean the Wall Street banks and all, a lot of these deals, a lot of the property would be resold, and eventually they would come up into the hands of these bigger banks and insurance companies like in New York. And so I guess they would be the first ones to be paid off in any type of bailout, would they not?
Well, sure. I mean, if they're holding the first mortgage, they're going to get the money first before anybody. And the savings loan might be holding a third or fourth mortgage. I mean, they would wrap these things and flip these things so that the S&L might be third or fourth in line and would never get, once the property's sold and the first mortgagee is paid off, the S&L's left with nothing.
Pete, there's a chapter of your book called The Mobsters, Spooks, and George Bush, the Palmer National Bank story, that ties all these things that we're talking about together. In other words, the way that high-level officials with connections to the government, corporate and political officials, formed a bank, the Palmer National Bank, and how it became connected with all these unsavory operations. Do you want to give us some detail on this to sort of concretely illustrate this analysis?
The Palmer National Bank had just about everybody in it. It was a small bank, still exists in Washington, D.C., about 2 blocks north of the White House. It was started by a Louisiana businessman named Harvey McLean and a political operative in Washington, D.C. called Stephen Halper. And McLean and Halper met in 1980 when they were both working on George Bush's presidential campaign. And Halper later was head of the policy group for Bush. And then when Reagan became the nominee and Bush was named vice presidential candidate, Halper went to work for their campaign as part of the policy group and was actually a high-level official in what they called the October Surprise Group, the group that was trying to determine whether or not Carter was going to pull off an October surprise and get the Iranian hostages home or whatever. And Halper was in charge of this group. His father-in-law was Ray Klein, who was the former deputy director of intelligence of the CIA. Klein was working with them, with Bush. And then when Reagan and Bush won, Halper went to work for the State Department. They created a position for him. And James Baker, by the way, was the one that brought Halper over to the Reagan-Bush team after Reagan became the nominee from the Bush team. And Harvey McLean was a businessman from Shreveport, Louisiana, and he was being financed by none other than Herman K. Beebe, the mafia associate. McLean moves to Dallas and buys Paris Savings and Loan in Paris, Texas, and is borrowing money from Vernon Savings, from Continental Savings in Houston, And later, of course, all these loans go bad, and Paris goes bust, and McLean's business deals cost taxpayers probably over $100 million. That's kind of getting ahead of the story. Back in '83, McLean and Halper are taking a trip to China, and they start talking about, let's get a bank in Washington, D.C., and so they start Palmer National Bank. Palmer was named after McLean's grandmother and daughter. And the capital, the $3 million capital to start the bank, came from Herman K. Beebe and Bossier Bank and Trust.
The guy connected to the mob in Louisiana.
Right.
He seems to be everywhere.
And to Misher, and to Ben Barnes, John Connolly, all these people. So as soon as they start this bank, they begin lending money to conservative Republican PACs like Bob Dole and Jack Kemp. And then they take on another client, the National Endowment for the Preservation of Liberty, which was started by Oliver North and a guy named Spitz Channel to funnel private donations to the Contras. Okay, and of course the biggest donor was Ellen Garwood here in Austin, the widow of the former Supreme Court Justice. And Palmer National Bank was also lending money to the National Endowment for operating loans and for furniture loans, and helping funnel the money. That's where they had the money would go from Palmer National Bank to another Washington bank, to the Cayman Islands, and then over to Geneva, Switzerland.